Good morning. Welcome to CupO'Forex. This is David Frank with your daily video analysis for Friday, the 21st of November. Welcome to the last trading day of the week. Let's take a look at what's on tap today. It's been an exciting week. We had a lot of news come out and some surprises, some disappointments, but mostly it's been a decent week for economic data. Okay, so China's slowing down a little bit. It's not a really big deal that they're slowing down. When their GDP grows at 7.5%, I think that's a healthy growth, and for any country. And they're trying to switch over to a consumer based economy as is. So I think their days of double-digit growth are behind them. 7.5% growth. I think any country should be happy with that. Let's take a look at what's on tap for today. In about 4 hours' time, at 8 a.m. GMT time, the European Central Bank President Mario Draghi will be giving a speech. It's always interesting to listen to him these days. The European Central Bank is in a dire fight to fight deflationary pressures as well as economic stagnation throughout the entire Eurozone. Seems that every country there, from France, Italy, even Germany, are having issues at this time. And he has a interesting job to do, trying to maintain a common currency with all these different countries who have different problems within their own economies. So he doesn't have an easy job. Let's hear what he has to say today about the ever stagnating euro and the ever stagnating European economy. Also coming out today in a little over 9 hours at 1:30 p.m. GMT time, the Bank of Canada will release its core and its base CPI coming out today. The core CPI we're expecting to come out at a healthy 2.2%, which is at around where it printed last month, as well as the non-core CPI. We're expecting that to stay at around 2.1%. No big changes there. And that's going to be our economic news for today. That's the high impact news. That's what we should be listening for. I'd like to take a look at a bit of technical analysis today and focus on the yen for today. Let's get started with that. Okay, let's get started. Looking at the dollar yen this morning, it's been a very interesting forex currency pair. It's been on a rise. It's been shooting higher, um, no doubt. It hit a low back in mid October at 105 point 20, 105 0.05 in that area there, and since then we have shot higher. The 105, right where it hit a low, is right around the 55-day moving average, which you can see here. Since then, it's shot above the 107 handle. It's shot above the 108 handle. It's shot above 112.50. It's now above 115.800. It's also above 117 at this time, and we're apparently starting to lose a little bit of steam. I wrote yesterday that I was standing aside. Why? The dollar yen is very closely correlated with the MSCI stock index, which is a leading forward-looking indicator for global financial trends. And also, I elected to stand by and just watch for now, because sooner or later, forex traders and forex investors are going to start increasing their bets as to when the U.S. Federal Reserve is going to hike interest rates, which should let the air out of this balloon that we're seeing right now. And then we're going to see the U.S. dollar, Japanese yen reverse. As of yesterday and going into today, you can start seeing that we've hit a bit of a problem at 118.40, 118.420 in this area here. As you can see, a bearish candlestick starting to form. We don't have a confirmation of this yet, but it seems that traders are starting to have some hesitation. We can get a better look at what traders are doing on a daily level if we go to a 4-hour chart. Here is the 4-hour chart for today. We're starting to see a bearish reversal pattern a little bit better here. What you're noticing here is some hesitation, a doji forming. Now we're hanging some dojis, when then you're seeing a hanging man chart formation starting to form. And here is your bearish candlestick right here. A little bit clearer. See another hesitation here, forming here with another doji. So let's watch this a little bit closely. Buyers, sellers are a little bit hesitating right now. Buyers are hesitating to take it higher. I kind of saw this happening, and this is why I'm standing aside. Should we reverse, we're going to need a close back below 115,800 to change my model back to bearish. But for right now, I'm staying neutral and looking at the sidelines, as I think we're going to start entering into a bit of consolidated period for right now. Well, this takes care of today's technical analysis and our daily video. As always, have a wonderful weekend, and we'll chat again on Monday.